Good morning and good afternoon, everybody. Warm welcome to the fourth and the last session of Mastercard EEMEA Crypto Week. My name is Andrea Prazakova. Some of you who've been joining us since Monday already know me, and I lead Mastercard Foundry in EMEA region, and I am again your MC for today. This is our fourth and last day, and I really would like to know, maybe you can tell me in the chat who was here before, who joined us for any of the sessions during this week would be lovely. Please pick up the chat, tell us how you liked it so far, and or if you are with us for the first time, would be nice to know as well. Whoever came today, again, thank you and great to welcome you back. So today we will be unpacking a really, really interesting topic about central digital currency. One calls it CBDCs. So, I think it's a really, really hot topic. And in the previous sessions, the audience was super busy in the chat, commenting, asking questions. So please don't be shy, put your questions and comments, and we will try to answer them either in the visual session or in the chat as we go. Hopefully we will be able to answer all of that. So before we dive into the future, that's what Kamran will be talking to us today about is, the future of central bank digital currencies. Let's look a little bit about the history of money. So, China, as you probably all know, is the first country who introduced coins about 770 BC. And about 70 years later, about 700 BC, it was again China who devised the system of paper money. However, the true coin base began after 650 BC in Greece. Their Lydia's king Alatheus minted the first official currency. So if you think about it, that's a really, really long time since we are dealing with currencies. Now, from a banking and central bank perspective, that came only in the 17th century. So for a really, really long time, it was kind of unregulated. Only in 1684, it was the Bank of England who became the first public bank to regularly issue banknotes and alternative to coins as a means of payment. So you can see, there were big gaps in between. Now, fast forward, 3 centuries later, the primary task of central bank is really to maintain price stability. And obviously, I'm underplaying it. So if anybody is there from any central bank, please don't take this like exclusive description. Now, but these conscious institutions are now buzzing, super buzzing with all the talks of a revolutionary concept in form of money you cannot see, which we call central bank digital currency. CBDC are a very important topic globally. 86% of central bank are researching CBDC, 60% are experimenting, 15% are working on pilot agreements. We're also starting to see early examples of central banks going into live with CBDC, such as $10 in Bahamas and Naira in Nigeria. So the idea of digital money is not new to us. And most of us on the call today, we're using debit cards, credit cards, mobile wallets, payment apps for transaction. So what would make the central bank digital currency so different? What drives all these initiatives and what it means to us? So with fewer ado, allow me to introduce you today, our colleague and panelist, again from Dubai. Let me welcome Kamran, which is our fourth session this week, who is our blockchain and digital asset guru. Kamran is deeply passionate about everything about crypto, and I always am delighted when I can stop at his desk and we can just chat. I learn every single time something from him. He leads multiple initiatives regionally, including crypto cards, blockchain, crypto acceptance. And one of the key focus areas of Kamran is CBDCs. So Kamran is also an active investor and collector of NFTs and early adopter of everything crypto related. So Kamran, such a great pleasure to have you with us again today. It would be a really good place to start to say, what are CBDCs and how are they related to our types of digital currencies?
Yeah, I mean, that's a very, very good place to start indeed. And I think everybody especially those who have attended the earlier sessions, we've talked about a lot of different applications and we've talked about a lot of different forms of digital currency. So I think let's begin by, first of all, establishing some key definitions. Okay, so there's a lot of conversation happening around this concept of digital currency or virtual currency. Okay, so let's consider that to be the umbrella term. And in my mind, they're interchangeable actually. digital currency and virtual currency. Any currency which exists purely electronically without any kind of a physical presence, right, which exists only as a digital record, is a virtual currency or a digital currency, right? And we're seeing lots of these examples, both, as you pointed out, Andrea, we already have existing sovereign currencies in digital form. When we transact with money that's being held in bank accounts, money that we're transacting with loaded onto cards, I mean, those are all digital in form, right? Similarly, there are many private digital currencies as well, which I guess some people label them as virtual currencies. So those of you who have kids, and your kids, if they're playing Fortnite or they're playing Roblox and they're bugging you every few weeks, asking you to buy them V-Bucks or Robux, those in-game currencies, which are actually used within those closed ecosystems, those are also digital currencies. And, a lot of people call them virtual currencies. So we've had these things in place for quite some time, right? Now, cryptocurrencies are a special form of digital currency that basically, these are the currencies that are recorded and transacted on a blockchain, right? And so
Correct.
Digital currencies is like the umbrella term, and then you have cryptocurrencies as one variant. And then if you look at the different types of cryptocurrencies or digital currencies which are available, in Mastercard, we classify them into three groups. You have what we call the private floating currencies. So Bitcoin, Ether, Monero, Binance Coin, all of these would fall into the floating digital currency or cryptocurrency bucket. These are the currencies which are very, very volatile, and currencies whose value in US dollar terms is purely based on supply, demand, and other.
Right.
Right. Then you have another bucket. These are stable coins, right? And examples of stable coins in the consumer world are things like Tether, things like Circle's USDC coin, some more formal initiatives like JP Morgan has JP Morgan coin. We've seen some regional initiatives as well to launch dirham-backed stable coins or gold-backed stable coins. The hint is in the name. So these are also digital currencies or cryptocurrencies, but their value is not volatile. It's not based on supply and demand. Their value is based on the fact that they are pegged to an underlying asset, usually a fiat currency, right? So they're pegged to the dollar, for example, or something like that. And because they're less volatile, they carry all the properties of digital currencies, but they don't have the volatility. They're one-to-one with fiat typically, right? And then the third bucket is central bank digital currencies. And central bank digital currencies are basically just about every form we've seen up until now. They're basically stable coins, except that they're issued by the central bank as a sovereign currency as part of the overall money supply. So that is what central bank digital currencies actually are, right? And
there are these two types in the central bank digital currencies, the retail and wholesale. Can you bring a little bit of light? What is the difference between these two?
Sure. So we've seen when central banks started exploring this, the distinction between retail and wholesale is basically what kind of use cases they're applying these digital currencies to. So a lot of the early experimentation was around wholesale digital currencies. And that basically meant that the use cases they're geared for are institutional transactions. So settlement of securities, delivery versus payment when you're settling a securities transaction, or interbank settlement, or large business-to-business payments. So they are primarily targeting wholesale use cases. So these currencies are basically made available by the central bank to institutions only. So they would not come to the hands of you or me. They would only be institutions held in institutional accounts, and they would only do those very specific transactions. Retail, on the other hand, the idea is that just like you can, as an individual, you can own Bitcoin and have Bitcoin in a wallet without a banking relationship, you should be able to have the central bank issued digital currency in a central bank created wallet. How you get it is a different matter, but in a wallet, you should be able to hold the central bank issued currency. And again, you should be able to do that without a banking relationship, strictly speaking, right? Or without a bank account. So that's basically the distinction between wholesale and retail. It's about who you provide it to, what kinds of transactions you do.
Amazing. I hope that the audience, got all the definitions which you were, throwing at us, from the floating cryptocurrencies, stable coins, and CBDCs, and within the CBDCs, the retail and wholesale. I think it's a really, chunk to understand and go through. But thank you for explaining it. So we see that there is really a lot of activities happening around this from a different central bank. Why is that?
So if you look at it, it all started with central banks reacting to the rise of cryptocurrencies, right? So Bitcoin, for example, the first known cryptocurrency as we know them today, came about as a direct reaction to the 2008 financial crisis and all the quantitative easing that the central banks basically carried out afterwards in order to deal with that crisis, which led to a significant devaluation and significant amount of printing of money and devaluation of currency. Right. So these private cryptocurrencies started coming up. People started to more and more, first in smaller numbers, and more prefer transferring balance over. And central banks initially viewed it with skepticism. Then they started hearing about the technology. And then they said, okay, fine, let us start exploring this technology. So it started as a reaction to the growing rise of private cryptocurrencies.
Right.
And it started far back as 2014, 2015. At that time, like Bitcoin, people had started knowing what Bitcoin was, but it did not have the cachet it does today. But central banks, so some of the more, shall we say, leading central banks, they started looking at wholesale use cases initially. They said the technology is interesting, but this is never going to go into the hands of the consumers. Let us look at wholesale use cases, right? How can we apply blockchain technology? So you had the Central Bank of South Africa doing what they called Project Coca, releasing a report about that in early 2016, which was for a wholesale CBDC. You had a lot of experimentation done by the Monetary Authority of Singapore, for example. So there was a lot of it.
So
then,
however, go ahead.
Go ahead. You had a question?
No, yes, I was, when you translate it into the opportunities, so because obviously you said that the central bank, it was more reactive to what was happening in the market, but now they see many of the opportunities inside. What are some of the opportunities which are opening up for the central banks?
Exactly. So that's how it initially started. But then what happened is that around about 2018, when Facebook announced Libra, and the potential that the Libra coin would have, that's when a lot of central banks suddenly said, hey, retail is something we should be taking a look at as well. And they quickly started studying it. They started looking at what the value proposition was that Facebook was putting forward. They took another look at how people were actually using the private digital currencies. And then they started to realize that there were potentially a lot of problems that a central bank digital currency could solve. So central banks, depending on which market you talk to, the motivations vary, but in general, there are some commonalities. So reducing the cost of physical cash, right? So CBDCs are seen as one way to allow the unbanked to carry out transactions digitally, replace the kinds of cash-like transactions that take place into digital transactions, which are more secure and which do not require you to have a bank account. So simultaneously, you're reducing the cost of cash, which is a real problem in some countries. There are a few countries in our region that import, they get their physical cash printed and minted overseas and import it into the country. You can imagine how much that costs, the cost of money there. And digitization would be, a tremendous cost reduction. Then the fact that you can hold these in wallets without necessarily having bank accounts means you can start bringing the unbanked into it. So there's financial inclusion benefits that it brings as well, right? When they started studying the blockchain, they realized that things like smart contracts, which everybody was talking about, could potentially enable new capabilities in the vein of programmable money, right? So central banks, for example, establish monetary policy today by issuing memos, and they expect compliance. Well, what about taking some aspects of monetary policy and actually enforcing them through code with smart contracts? Now that changes the game a little bit, right? And then finally, we've talked about earlier in the, especially yesterday's session, how transparent blockchain is. Right? So for a central bank, a very interesting thing to explore is that, hey, if I do a CBDC, which is blockchain based, how does that change my visibility as a central bank supply? Yeah, I mean, there's a lot of things that it enables.
I was fascinated yesterday. It almost like felt that even the blockchain started on the dark web with all this transparency of this company like Cybertrace. You can't hide anymore, So I wonder how it will impact the other side of the economy. But how much of this is theoretical and how much is this real, what you're just describing?
So I mean, that's it. That is one of the most important questions I think that needs to be asked, right? So it's all very well to do this exploration, and but it's also very, very necessary to look at these things in a very pragmatic way, right? So every single one of these benefits that I've mentioned right now about what a CBDC could achieve, all of it is theoretical at this point. No one has yet launched a CBDC and run it for long enough to say that we have successfully solved XYZ problem, right? Even the examples we have live in the market are in the very early stages of going live. They simply haven't been around long enough for you to quantify the benefit that they might have had, right? Then, as we put our solutioning hats on, okay, and we take a problem-solving approach to things, if you're looking at a problem, for example, financial inclusion and digitizing transactions, CBDCs are potentially one way to solve that problem. Are they the best way, the only way? No, not necessarily. There are others available as well. Yeah.
So like everything, you know, new coming to the market, there are always risks. And obviously we spent the whole session yesterday, we traced the transaction and saw it in, you know, real life. What are some of the potential risks and challenges with CBDCs? And you just mentioned now that obviously the system just started, so there's not enough track record to know what works, what doesn't. But what are some of the top ones which you have in your mind?
Oh, see, this is about basically a central bank issued sovereign currency, right? And anything that is launched is going to affect your entire ecosystem in a way. So you really need to give very, very careful thought to what negative consequences it might have. If you go ahead and do something like this, right? Consider it to be like launching a brand new type of payment system on a brand new technology. So we've already discussed how important it is to take a problem-solving approach. What is the problem you're trying to solve, and is a digital currency the right or best solution for that problem? And the answer will differ from market to market, right? So for just as an example, a very developed market like Singapore, where retail transfers are very cheap, very quick, almost fully digitized, there's nothing a digital currency is really going to do over there that's going to be an improvement over the existing system, right? In other markets which have
that's an interesting statement you just made.
Other markets which don't have a very advanced domestic payments infrastructure, well, there a blockchain-based system might be an alternative way to leapfrog, because there's nothing already there that serves the purpose, right? So use cases are a very important point. The second thing is that there are multiple CBDC models, right? We've already sort of touched upon one aspect of this, wholesale versus retail, but there are so many different CBDC models and design choices, right? Which one is the most appropriate for your particular situation, right? That has to be carefully considered. Then, if you're going to issue a CBDC, how does that impact existing financial sector transactions, right? Is there going to be, for example, a lot of central banks are concerned about deposit substitution, right? Is there going to be a drain on bank deposits and people put more and more of their money into CBDC? How does that affect the banking sector and the lending and everything else happens around all of that? That has to be considered as well. And then finally, if you're going to launch this, right, you need to think very carefully about how is this going to impact regulation? How is this going to impact legal considerations? How is this going to impact monetary policy? And finally, like any big payment system, how am I going to govern this and run it as a payment system? Because make no mistake, this is going to be an additional payment system. So all of those things need to be taken into account. And then adoption, right? Even if I do launch it, how am I going to get people to actually use it, incentivize them to use it, right? So there's lots and lots of considerations that have to be very carefully taken into account before central banks go and do on this, which is why so much of what you're seeing today is experimentation rather than actual go lives.
Yeah, that's a really good point, because I think that many of the central banks are currently experimenting, right, as you said, to test the waters, see what is doing, and how to find out all the areas which we don't even know. I think that the list which you just mentioned is not even exhausted. No, there might be so many others. I think this is just scratching the surface in terms of challenges. But you know, it's really fascinating, especially the part about the different CBDC models. And you know, you in the beginning you spoke about the two generic wholesale and retail, and now you made us a little bit more hungry to say that there are more models than only two. Can you elaborate in this area about, you know, about the models of CBDCs?
Sure. So it really comes down to, when we say models, it comes down to a few different types of design choices, right? So the first thing you consider is whether your CBDC is going to be single tier or two-tier or multi-tier, right? What does that mean? Single tier means that the central bank is directly providing CBDC to consumers. And we're speaking in the context of retail CBDC here. Central bank directly providing CBDC to consumers like you and me. So essentially, we have direct accounts with the central bank rather than with the banking sector. Okay, this approach obviously is one possible approach which some central banks have looked at, but this approach disintermediates the existing financial sector altogether, right? It imposes additional responsibilities on the central bank, things which typically they delegate to banks, and the central bank is not set up for. Now suddenly you're into account management, you're into customer management, you become responsible for KYC and transactions. So although the approach is being considered, most central banks that you speak to will not be in favor of this, right? Yeah. The other alternative is a multi-tier approach, in which the central bank makes the currency available to a second tier, which would be composed of banks and potentially other types of entities, right? And these entities would then make the CBDC available along with services to consumers. So, and that is the approach which most of the people that we've spoken to, most of the central banks we've spoken to, would feel that this is exactly probably the right thing to do, right? Then there's also this concept of account-based versus token-based, which you will hear a lot about. So anyone who's researched CBDC, when you're reading documents published by the IMF or by the World Bank, they will often mention an account-based versus token-based approach, which basically comes down to where are you actually storing your CBDC, right? Are you treating the CBDC as something which is held in custody for you by banks, just like your bank deposits are today? Or are you treating CBDC like something like Bitcoin, that you have custody of it? Nobody can debit your wallet unless you explicitly sign the transaction. There are trade-offs to both, right? But those things have to be very carefully considered. For most situations, we feel account-based is the better design choice. There are situations where you need to have token-based as well.
You know, I want to pick up some questions from the chat as well, Kamran. So we have a question from David. Do you think the central banks have given enough thought to how they operate CBDCs in light of other retail wallets like mobile money in sub-Saharan Africa?
That is a very interesting question. So sub-Saharan Africa is a big territory. So the answer is that there are some central banks that we're speaking to that are giving very careful consideration to this and actually asking that very question. Once you actually get down into what a CBDC will actually look like, a very natural question that is asked is, okay, how is this really any different from the mobile money that we have, right? And it's a good question to ask, right? Some central banks are doing that. Now, obviously, this would be places where there is a strong mobile money component, right? There are other central banks, perhaps in markets where there isn't that much of a strong mobile money component, or there might be, but the central bank just chose to ignore that and go ahead anyway. So we're seeing both. It's a variety of different approaches. Central bank motivations for doing digital currency are very, very varied, right? In some cases, central banks have issued a CBDC or talked about issuing a CBDC simply to justify banning private cryptocurrencies, essentially, as well, right? They're worried about private cryptocurrencies. They believe that if we launch a CBDC, people will not need a private cryptocurrency anymore. Now, that, of course, is again something which has to be examined very, very carefully, because I personally don't believe that that's true. But yeah, there's a whole variety of motivations. Most central banks are giving it careful thought, however.
Linked to that is one more question, which can you also advise about any new laws of having digital assets by UAE Central Bank?
So that would be a fairly big answer here, right? But as far as the UAE Central Bank is concerned, like this is one of the most progressive central banks in terms of having a regulatory framework around digital assets. So there is a regulation which has been published by the UAE Central Bank, which specifically talks about virtual asset service providers. It defines I think 3 or 4 different categories of virtual assets and the kinds of services that virtual asset service providers can provide. For private virtual assets and crypto exchanges that offer services around those virtual assets, there is actually a licensing framework available now where crypto exchanges can get licensed and start offering services. So the UAE is fairly ahead in that area. And then on the central bank digital currency front, it's again public knowledge. The UAE central bank collaborated with the Saudi central bank in a test of a wholesale CBDC for cross-border institutional settlements, which was completed last year. It was called Project Aber. They published the report for Project Aber, which I believe you can find on both of the central bank's websites.
You know, there's a really interesting one, though. I think you will like. I like this one, Kamran. Is can a bank operating in multiple countries utilize a CBDC, a like concept to build its remittance aggregation network? I think this one is really cool.
I love that question, and I'm also aggravated by that question personally, because I spent the first year at Mastercard diving deep into just this aspect of it. Is it technically possible to do? Absolutely, yes. Does that method provide certain efficiencies in terms of the time taken to process a transaction, maybe the processing cost of a transaction when you're going across borders? Absolutely, yes. Does it solve for absolutely everything? The jury is still out on that, right? So when you're transacting across borders, one of the big inefficiencies is actually FX conversions, right? Converting a currency from one currency to another. That is one of the biggest elements of cost actually that comes into play as well. So when you take a central bank digital currency like structure, which is basically a stable coin. So if you're taking a private CBDC, you're talking about a stable coin, right? It's all stablecoin models we've seen so far are pegged to one. Basically, you have a digital dollar or you have a digital dirham or something like that. Now, a CBDC like structure will enable you to transfer it instantly, okay, which is great. The network will typically be 24/7, which is great. You will have some efficiencies definitely, which is great. But then at the other end, if what you need is not a dirham, you need some other currency, you still have the currency conversion aspect that comes into play. So you don't really solve necessarily for FX cost. That still needs to be taken, looked at. The second thing is that the question I always ask is, we consider receiving a digital currency as the payment is now final. Okay. Is it really? When you receive a digital currency, if you can use it in its current form to pay for something else, for me, that's final, right? If there are other uses. If I'm receiving a digital currency, but then I have to go and get it converted to normal fiat currency, which is, the other end of the transaction, then what value are you really adding? How much value are you really adding, right? So we took a very, very close look at this. There's definitely benefits, but perhaps the benefits aren't as big as maybe some people have estimated. But it's definitely an interesting look at. It's the ethics problem in mind that really needs to be looked at.
So you have spoken about these different design choices and what are all the different things to consider. What is Mastercard's view on these topics?
So Mastercard actually, we've been looking at the CBDC space very closely for about, it's been well over 4 or 5 years now. And in terms of central bank engagements, both formal and informal, very actively for the last 3 years now. So we have come up with, a set of design principles we believe in very, very strongly. And I've talked through some of them already, right? But if I were to point them out, there's 4 of them. Number one, a CBDC has to be fit for purpose, right? So everything we've seen so far across all the numerous central banks we've spoken to, all the use cases we've talked about, one thing is absolutely clear. A CBDC is not the solution to everything. It's not like a CBDC is going to come in and replace every single other kind of payment that exists. It cannot, right? It simply is not practical. CBDC could, however, be a very useful additional tool for a central bank to use where appropriate. And so fit for purpose. And fit for purpose will be different from country to country, right? So it must be fit for purpose. Number two, a CBDC must embrace private sector participation, right? So a single tier CBDC, for example, that cuts the private sector out, we do not believe that is the route to success. A CBDC that embraces private sector participation, allows the private sector to participate and actually innovate and create innovative new uses for CBDC, that we believe in all cases is a successful path going forward. Number three,
can CBDC, you pause on that number 2 for a second?
Sure.
Just to hold the horses, because what you just said is, I think, very significant, because it will require a dramatic cultural change how central banks operate today. Because if you say without the private participation, it actually ain't working, right? But
Exactly.
so it's really important to invite, which today the central banks are not doing. How do you see this will transform over the next couple of years? I found that this is such a big area, you know, for to dig a little bit deeper.
No, actually, that's an excellent question, and because by the way, a lot of central banks have this in mind, right? So because there are so many questions around this, many central banks are taking the approach of doing a simulated experiment first, where basically they try to create an ecosystem for what a CBDC would look like, which mimics the real world as closely as possible. And initially, the central bank themselves role play as market participants, commercial banks, et cetera, et cetera. But I know from talking with most of them that a lot of them, if the initial experiment passes the sniff test, basically, then for phases 2 and phase 3, the next logical choice is to bring in a couple of banks to actually participate. So when South Africa did Project Oka back in 2016, they actually had a number of South African banks actually participating and running live transactions after they did their initial experimentation.
Interesting.
Right? So
that's amazing. So you obviously mentioned the fit for purpose and embracing private sector. What are the other two areas which you wanted to mention?
The third one is the one that actually will require private sector participation even to test interoperability and open acceptance, right? A CBDC cannot work in Mastercard's view if it is a closed loop, kind of like completely separate ecosystem that shuts everybody out, right? We believe that a CBDC should be able to transact in multiple ways across multiple networks, right? Because again, problem-solving approach, different types of transaction flows are suited to different situations. A direct payment, like the typical blockchain model of a direct instant transfer of value from wallet to wallet, right? Which everybody says is the future. It's great in some situations. If I want to send money to you, Andrea, or if I want to send money to my father, or I want to pay the guy who cleans my car, that instant transfer of value is absolutely fantastic. It is what you want, right? If I'm buying a laptop from the internet, then I don't want the instant transfer of value, right? Then I want it to take place like a normal e-commerce transaction where I have a window to actually return it. There is the provision for, getting a refund, or I can file a dispute or something like that. Consider a complex business to business transaction. You don't want instant transfer of value over there either. So you have to make a CBDC workable across multiple payment networks, right? It has to be interoperable. In our view. That's extremely important. And the way you test and design interoperability properly is with the participation of the private sector.
Right.
And then finally, a CBDC must safeguard consumer interests, which is again a key consideration in the interoperability and use case design.
So, I'm really fascinated about the interoperability, because it's such a Pandora box, because it means many things to many people, and sometimes in different forms and shapes. So if we speak about the interoperability, can you give us some real examples so that we can bring it alive for the audience?
Absolutely. So one example which is live right now, and it's, I guess, one of the simplest examples and most logical examples of interoperability you can have. Bahamas, the Central Bank of Bahamas launched their central bank digital currency, the sand dollar, a while back. Right. And now in the Bahamas, it made absolute sense. It's multiple islands. They wanted people to be able to obtain wallets in which they could hold a balance of sand dollar. And within the Bahamas, they should be able to transact wallet to wallet, right? Basically mobile phone to mobile phone, working very much like mobile money does. Or if anybody has used Bitcoin, for example, the way a typical cryptocurrency transaction works, right? You scan a QR code, you transfer, it's done, right? Instant. But then what happens if somebody who holds sand dollar is at a merchant that does not have a sand dollar wallet? What if somebody has a sand dollar and is traveling outside of the Bahamas in a country where nobody knows about the sand dollar? How do you use the money there? This is where Mastercard worked with Island Pay and the Central Bank of the Bahamas to launch a Mastercard that is linked to sand dollar wallets. So what happens over here, we've discussed a little bit about our crypto card program yesterday. It's
Yes.
very, very similar to that. It's basically a CBDC card, right? So what it does is you go to any merchant, okay, and the merchant will price their goods in any currency, okay, and you pay using your card. If the merchant wants to get paid in pounds in their bank account in the UK, that's what will happen, as it would for any other card transaction. At the consumer end, instead of your bank account being debited, which happens with a normal card transaction, your CBDC wallet will be debited instead, right? So it becomes another endpoint. And suddenly your CBDC becomes usable everywhere. You don't have to worry about whether the other person has a CBDC wallet or not. So it completely broadens the utility that CBDC provides. This is one example, a very simple example of interoperability with card networks and the benefit that that can bring, right? And again, I'm sure everybody listening will be wondering about this, right? The transaction flow here is not going to be the standard direct wallet to wallet transaction flow. The transaction flow here is a card transaction flow with a wallet being debited, an account being credited. And that has several advantages as well. All the things that you need in a card network are brought to, consumer protection, loyalty calculation, all of those come into play. Banks can use their existing settlement mechanisms. Merchants can use their existing acceptance and merchant accounts. It's the best of both worlds. So that's one example, right? Then we have several other aspects of interoperability, which are a little bit more experimental, right? But one very, very clear thing is interoperability with, account to account systems.
Yes.
And here, the basic idea is, if I send money from my bank account to you, it should be that I can send dirham from my bank account and have it land as Bahamas sand dollars in your sand dollar wallet. And I shouldn't have to worry about how that happens. It should be as seamless as sending money from one account to another. This is basically domestic account to account systems interoperating with CBDC networks, right? It's a very logical next step. And then you take it further. There are multiple CBDC networks sprouting up at the moment, right? So we know that Nigeria is already live with the eNaira, other systems live as well. So these systems will need to talk to each other. So that's a third form of interoperability. And finally, as we discussed earlier this week, people are being attracted to NFTs, people are being attracted to decentralized finance. So I've actually had central bank conversations where central banks have explored, hey, if we issue a CBDC, how could we safely enable a CBDC holder to, let's say, apply that CBDC to a decentralized finance offering, let's say on a public network, like Ethereum, and get profit and bring it back to the CBDC network. So although that's much further out because there's many more security considerations, government networks interoperating with private networks to allow citizens to take advantage of things like NFTs and DeFi, which exist on those networks, that is also something to consider. And again, it's an element of interoperability.
Yeah, I think that when you started to speak about, the $10 in Bahamas, I had to still think about Keith, who we had a guest on Monday, and his, big hobby of Marvel and all these characters. If you look at it, almost it's like a Wakanda story, right? And Wakanda has the CBDC, and then they issue a crypto card. And if they go to New York, they can obviously use the Wakanda card and pay in US dollars, and it's all converted into CBDC. So I think in a really simplistic way, that's what it is, right? But can you just elaborate on the last point a little bit more, which was the interoperability between the different blockchain networks? I specifically, because we spoke obviously about DeFi, we spoke about NFTs, we spoke about metaverse, and we have a question in the chat around that as well. Is how would it, if you imagine, how would it practically work if you say, okay, in a country like UAE, which is really far developed, many people have crypto wallets, people invested on NFTs, people maybe are having businesses in Sandbox, in Metaverse, and then the country decides to issue CBDC. How would it practically operate?
So this is, again, something which is in the early stages of design, right? But I can talk about a few high-level concepts, which are already in practice today, but they need a lot more refinement and standardization, right? But I think it would be good for everybody to know what are the patterns that are being sort of already applied. So we'll take a very simple example. Let's take the example of, let's say, a government CBDC network, which could be placed on a blockchain, could even not be based on a blockchain, by the way. CBDC does not have to be blockchain based, does not have to be a cryptocurrency. It can be a normal digital currency, right? But let's say you have a CBDC, which is blockchain based, which the government has. And let's say you want to interoperate where you want to use that CBDC in a metaverse, and the metaverse transaction system is on the Ethereum blockchain, public Ethereum blockchain. All right.
Mm-hmm.
So some people who are in the crypto space at the moment, they might have already seen this. You often have the same currency available on multiple blockchains. USDC, for example, the stable coin, which is issued by Circle, it is available on the Ethereum blockchain. It is available on the Binance Smart Chain blockchain. So how did they do that? How would a central bank do this? The way a central bank would do this is, let's say I create 1 million units of Ethereum, right? And then I decide, okay, I'm going to float 100,000 on the Ethereum blockchain as Ethereum tokens, Ethereum as a standard. Okay. And I basically would need to integrate with the Ethereum blockchain and be able to track that 100,000 that I've floated there. Once it's on the Ethereum blockchain, it becomes an Ethereum token and it can be used on any.
But it's within the network.
Okay. To bring that token over to the Ethereum blockchain, there is something called a bridge, which is typically required in the middle. Right? There are some early versions of bridges which are available. These have to be designed very carefully. A lot of the hacks you hear about in recent times, many of those hacks have been hacks of these bridges, not the blockchains themselves, right? So you really need strongly coded bridges, but that's basically how it would work. So it's the concept of, and we call this a wrapped tokens. Okay, so I know I'm throwing a lot of terms at the audience here, but this is what's called a wrapped token. Right? So Bitcoin comes on its own blockchain. You go to Ethereum, you find there's something called a wrapped Bitcoin. Okay. So there is a certain amount of Bitcoin parked in a certain wallet and wrapped Bitcoin tokens, which are one-to-one issued against that on the Ethereum blockchain. You want to redeem one of those for actual Bitcoin. Again, the bridge enables that for you. The token is destroyed on Ethereum and you get your Bitcoin out of the Bitcoin wallet. So it's very similar to, you know, locking up assets in an account, and then you can redeem a token, those assets back.
That's a good example.
So
there is one more question on the interoperability, Kamran, is how is this interoperability can happen with each country having their own standards and regulations?
Fantastic question again. And here in the conversations we've had, we've discussed, you know, there's three cases here, right? So consider the first case, two governments interoperating with each other. All right. Now, for the most part, CBDCs are government controlled networks. So when two governments want to interoperate, right, they will be able, as owners of the network, they will be able to come to an agreement. So I'm going to float my token on your blockchain. These are the rules that I want to apply over there. When you send your token to us, tell us what rules you want to apply. We'll make sure those rules are adhered to here. So it will be a government arrangement, right? That can be made, an agreement. So you have control to some extent in terms of both governments.
Right.
Then you talk about a government network interoperating with a private network, which still has an owner, right? So imagine JP Morgan is setting up this network of JP Morgan coin, which is for settlement with their partners. So if you want to float your CBDC on the JP Morgan network, again, JP Morgan is the owner of the network. You can negotiate with JP Morgan and establish the rules of engagement. You can control what is allowed, what is not allowed. Third thing, taking your token and making it available on the Ethereum blockchain, the public Ethereum blockchain, now you have no control at all. You can monitor what's happening with your token over there, but you cannot control it because anybody can write any smart contract they want, which is why if you talk about what's going to come first in terms of interoperability, you're going to see government to government interoperability come first. Then government to regulated private network interoperability comes second. And if government ever actually enables interoperability with the public sector, it's going to come last because there's so many questions that need to be answered there. There is a tremendous loss of control that happens.
You know, you mentioned in the beginning that one of the opportunities there is, you know, financial inclusion as well. And there's a question in the chat which says, you know, what is your thinking around how CBDC can be introduced in a non-smartphone market in order to capture a large majority of the population and reduce financial exclusion?
If I had the answer to that, I'd be a billionaire. So it's the question. It is the question, right? So we have the majority of the cryptocurrency transaction mechanisms rely on the use of a mobile app with a smartphone, right? But we have many markets where smartphones are not practical, not available.
Right.
Okay. So in some markets where you have feature phones available, for example, there partnering with the MNOs that provide services in those markets, you can implement USSD-based or SMS-based transaction protocols to allow CBDC transactions to happen. But then you have another problem. In some markets, even the basic phone connectivity coverage is not fully available, right? There are some mountainous regions, there's some regions out in the desert. You do have lack of coverage. Now, over there, it's a very early experimental area, is the concept of completely offline transactions, where you have some sort of a device. Almost all the experiments at the moment are using, feature phones with NFC or Bluetooth capability. And you need to have a protocol where one device can transfer value to another device. And only the two devices know about that transaction. And then whenever the network becomes available, you sync back with the network. Right. And there are a lot of complexities around that as well. So this is an area which is getting a tremendous amount of attention. It is one of the key asks from the central banks in the emerging markets.
I can imagine.
It is actually one of the key asks, even in the developed markets in Europe as well. A couple of the central banks are very closely taking a look at this. There are, in addition to the phones, there are some early stage initiatives underway to develop completely new types of digital bearer instruments that you'd be able to carry around with you. And I guess ultimately, if anybody wants to know how that would work, like in the far future in a science fiction sense, I always refer to, I mean, it's far-fetched, but I always refer to the movie In Time with Justin Timberlake, right? Where everybody has this device embedded into their arm and you touch the arms together and it transfers value. Like obviously that's the science fiction version of it, but when people talk about offline, that is the simplicity and the kind of close proximity transactions.
Yesterday during the cyber trace, we spoke about Minority Report, and when it came out 20 years ago, we also thought it's a science fiction, right? And many other movies, and it's all reality today. So I think it's not so far away from it. If you take, all this which we debated, what is Mastercard doing in the CBDC space?
So first of all, we've spoken, I think, at length about Mastercard's multi-rail strategy, right? And obviously, blockchain-based transactions are a key component of that multi-rail strategy. So CBDCs in particular are extremely important to us. There's a number of things that we're doing around CBDCs at the moment. First and foremost is basically working with central banks to enable certain things for CBDCs. So there are three broad areas. The first area is for central banks that are doing some sort of a live test or actually close to publicly rolling out a CBDC. As we said, we believe in open acceptance. We believe in interoperability. So working with central banks to build that open acceptance and to build that interoperability is one of the key areas that we have. So similar to what we did with the Bahamas Sand Dollar, which I guess is the simplest possible example of interoperability, but taking it from there, helping the central bank to truly make that currency work across multiple networks, all the way up to, for example, even settling card transactions in that currency on the blockchain rather than on the manual. So that's one of the things that we would do. The second area we have now a very rich set of CBDC focused consulting services, a very strong capability available within Mastercard, which is capable of consulting with the central bank and addressing all of those questions that we talked about earlier, right? Helping the central bank to do the initial feasibility assessment, helping the central bank to identify what are the right use cases they should even be exploring, helping the central bank to assess, is CBDC the right solution or is something else the right solution? Designing use cases around CBDC, helping the central bank to pilot those use cases. And we even have experts in our regulatory policy LFI divisions who are focused on CBDC, who, while they cannot provide legal advice, they can certainly go ahead and help to signpost all the regulatory and policy considerations that a central bank would need to take into account. And then, of course, how do you govern the entire system? So we have a very, very strong franchise capability, which is already experienced at governing our own payment system. And we can go ahead and apply many of those same principles to how a CBDC ecosystem should be designed and governed as well. So those are two broad areas. Finally, for central banks that are looking to do some sort of practical test, particularly if it's around multi-tier retail CBDC, a few years ago, we developed a central bank digital currency testing platform. So this is a platform which basically is a running CBDC multi-tier network, which already has basic CBDC issuing, supply management, transacting capabilities in it, which is something central banks can touch, see, feel, explore, and build more use cases on top of, right? So it can accelerate testing. Since we developed it, a number of other excellent solutions have become available in the markets. So we're pretty agnostic. Central bank can choose to use ours. The central bank can choose to use another platform. Our real bread and butter is the first two, interoperability and advisory services.
Amazing. So I just want to, also ask you, Kamran, we have obviously a lot of financial experts on the call, and what is some of your thinking? What should the existing market player do? Well, obviously this is a big topic, and it's fascinating, but it's so new, and there are so many questions which are unanswered. What would you recommend?
So I'm going to answer not just in the context of CBDC here, but I'm going to answer in the context of everything we've discussed during this entire week, right? Because the topics are very, very closely interrelated. First of all, I think it's very important for the market sector players to be open towards the rise of digital currencies of all forms, and to really make an effort to educate themselves and keep abreast with the developments in this space. I can definitely, say that Mastercard can help with some of that, but there's a lot of, for example, information out there, a lot of experimentation. There's definitely familiarity with the space as it emerges, I think is definitely one of the important things. Then focus on technical readiness, right? So we discussed how key interoperability is. A lot of the experimentations that central banks are doing, they will quite soon start moving to the stage where they start inviting banks to participate in certain pilots. And this is very, very closely related to, the kinds of initiatives that banks have to basically do in terms of connecting to other payment networks. So basically making sure your integration infrastructure and within the bank is really strong, your API capabilities are really strong, your open banking capabilities are strong, and you're able to go ahead and quickly participate in, these sorts of initiatives. Then the real knowledge about the potential applications of a digital currency that add value. The financial sectors are the business domain experts over here, right? Singapore Central Bank, for example, even went to the extent of saying, hey, we're just going to put a platform and do a hackathon. Banks, you come and you tell us what use cases you think might be interesting, and we'll give you the basic infrastructure and you build on top of it. So ideating on how we can use this technology rather than considering it as a threat. And I can see that already the winds are changing. Most banks are considering and seeing what the opportunities are rather than the threats. I think those are going to be, some of the most important things.
I think that, it's really amazing in what time you're living today and how it's changed, versus the last 30, 40 years in banking in general, where central bank was an institution which obviously didn't work with the private sector, and the private sector didn't really include their consumers. And today you see the private sector including their consumers and central bank including the private sector, which will obviously give us in the end much better services. We have as well a question: any printed guidelines or framework for CBDC which one can read up?
Oh, wow. That so there is a lot of material publicly available on this. Okay, so the most easy to digest way to get a quick overview. So everything that we talked about today is available as a publicly shareable Mastercard presentation. So if there's a way to sort of circulate that within the audience, Andrea, we have a white paper on that. So that's a quick summary of information that people can digest, right? Then if you want to explore further, the IMF has published several reports on this, very, very good reports. The Bank of International Settlements has published a lot of reports. They do a survey every year of central banks, and the latest survey is always an interesting read. The World Bank has published a report. The bank and several of the central banks, like the Bank of England and the European Central Bank, they have commissioned and published reports as well. The regional central banks have carried out projects. The report that was published by Central Bank of Saudi and Central Bank of UAE on the ABER project is another publicly available report that I would encourage people to look at. South Africa Central Bank's Project COCA report, Monetary Authority of Singapore's Project UBIN reports. There's a whole host of information out there. Direct central bank explorations and findings. So absolutely, there's plenty of material available.
Yeah. What is Hedera, Kamran, and how is it different from others?
Idara hash graph. So that's basically something which I'm in the early stages of researching myself. So, when we started looking at blockchain a while back, and blockchain was described as the new paradigm, very quickly people started saying, okay, fine, blockchain has certain limitations when it comes to performance. What are other technology paradigms that we can use? So a hash graph is one paradigm, which I've just started looking at. So I'm afraid I can't answer in detail right now because I don't know. But I do know it's something I need to take a look at. Just in case anybody is interested, there was another very interesting concept that came up when people started applying blockchain to Internet of Things. That concept was the tangle. I believe IOTA was the blockchain, or I shouldn't call it blockchain because it's actually a tangle, not a blockchain, but a cryptocurrency which used the concept of a tangle, which they felt was better for device-to-device communication rather than traditional blockchains. But yeah, there are multiple design patterns out there. So Hidara, I'm afraid it's still something I'm just starting to research myself.
Okay. Any last suggestion before I close the session, Kamran, from your side? Any last recommendations for the audience? I will obviously speak about the logistic of the videos and the white paper, but anything you want to send into the crypto universe?
Oh, I mean, absolutely. So I saw there was a question asking for financial advice there and saying it's not financial advice.
Yes.
No, absolutely. Look, guys, I mean, across this topic or any of the topics that we've had so far, during this week, we've covered a lot of ground. I know it's a lot of information. It can take them some time to assimilate. So I am available. I know my colleagues are also available. If you have questions, if you would like us to cover some topics in more detail, if there are questions you would want to reach out to us, we are available. These sessions, I'm sure we will make the content available, the videos available as Academy and Web normally does at some form. And in addition to that, if there are ideas that you have, experiments that you want to conduct, that is something we would be absolutely willing to consider as well, whether it's around crypto cards, whether you want to explore CipherTrace, whether you want to ideate on something new about how you can leverage decentralized finance or NFTs. Like Mastercard's role is very much in terms of facilitating those transactions. The real business applications of it, I think, need to come. And when we say private sector participation, that's what we mean. You guys know your business. You can best realize what are the use cases, and we can help you to assess and maybe try those use cases out.
Amazing. So, what a great session, Kamran, we had with you. I just want to also thank, obviously, the audience, but I'm struggling here a little bit with my machine. And I want to also remind the audience, it's about the 3 topics which you said in the beginning, how we can help them. So one was to build CBDC or the operability and open acceptance, CBDC advisory services, and CBDC test platform. So if anybody in the audience is interested, please do reach out to us. We're very happy to help you. I would like you to take out your phone and scan the QR code and tell us how you enjoyed the session. We also obviously will, Mastercard Academy on the Web team will contact all the participants of these sessions once the videos are published, to share the links to all the 4 days. So if you missed one of the days, we obviously, you can then watch it, or you can rewatch if you enjoy one of the sessions so much that you want to deep dive once again with us. We will also make sure that you get a link to a white paper of Mastercard on CBDC as a starting point, as a pre-read. So with that, finally, Kamran, big thank you. It was a great pleasure to MC your sessions this week. I hope that the audience agrees with me. We learned so much. We love the energy. And I want to thank the audience for their reactions, their questions, and for being with us for the 4 days. And with that, thank you very much. I would close the session. I hope you had the time to scan the QR code and to give us your feedback, and that we will see you in the next Mastercard knowledge series, which will be published by the Mastercard Academy on the Web. Thank you very much. Great pleasure, Kamran. Have a lovely day.
It was a great pleasure. And thank you to all the audience. Thank you for the engagement across the entire week. And blockchain is the future. That's my own personal thing anyway.
Yeah.